All right, welcome back for the episode of Carnivore Trades. Today is Friday, April 28th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it. So, last day of the month of April, and markets, hanging in there again. So, nice little update there for the S&P. Actually, had a nice little pop into the close. Maybe some end of the month rebalancing going on there. Certainly could be the case, but take a look here. The spiders now up 85 bips versus the Qs up just 70. And I talked about this yesterday. I don't really see a ton of upside here for the triple Qs compared to the spiders. I think the spiders are doing kind of like catch up here to the triple Qs, and now we are getting into a point here where we have Apple earnings. All the big tech earnings are out of the way, and we have Apple earnings coming up on Tuesday, and then Wednesday we have FOMC. This market here, and I say this all the time, but the more that we kind of drift higher here and squeeze higher into that, the higher expectations are for both Apple earnings and for the Fed. So again, the harder it is for Apple to continue rallying, right? If we're up, and by the way, this rising wedge is still valid. Now again, earnings, they could pull a Microsoft on earnings and gap up to 175. There's nothing to say that can't happen. But the more overbought it gets, the harder it is for it to rally, even on good numbers, and that's just the case across the board. Same thing with the market here. The Fed could come out and be dovish. But if you rally up into that, it's pricing that in. So are we pricing the market for perfection? If Powell comes out, let's say, we rally up and we get up into this area and Powell comes out and he's hawkish, market's all set up for failure. But if he's dovish, it's still it could be a sell the news event because you're rallying up into it. Either way, market stage a good gain here. And we'll respect it for now. I think we're setting up, though, for a sell in May. So we'll see what we get here going into, I would say Monday will probably be a little on the quieter side. Again, we'll probably today's price action really reminded me almost of Thursday, Friday from March 2nd to 3rd. So it was Thursday and then Friday, just two power surges after, a pretty good sell, right? So we had a a little dump there, and then 1-2 up. And then Monday was, basically a nothing burger. We did gap up and then we got way overextended. And then we came in very sharply, obviously, Tuesday, Apple reports after the bell. So we likely wouldn't reverse that quickly if that was to be the case. But either way, it's similar setup, right? Give or take a day. Now the Fed's on Wednesday, so maybe we can pop on Apple, and then maybe we initially pop on the Fed and reverse. Who knows what happens here. But I think this market's really on borrowed time here. And if we do squeeze up, that's going to be kind of the blow-off move from what I can see here. And, they did, had a nice little 1-2 down, 1-2 punch to the downside and ended up being a trap. So market's hanging in there, and they got a nice bid the last 2 days. So at this point, upside target would probably be this gap fill here on the spiders for the triple Qs. I don't see, there's not really that much. Look how close we came to this gap here. It is at 322.86. And look where we closed, 30 cents off of that. And I think we're touching it in the after hours there, but look at that on the 10-minute. So right to that gap, not quite there. I just don't see the upside though for the triple Qs. I can't rule out us wicking through it a little bit. I guess if Apple does, pull a Microsoft, it's possible the Qs could, have one more kind of pop in them. But really on that monthly, I think that 20 MA is going to come into play early next month. Again, we could wick through it a little bit, but really to me, the upside is more so on the spiders right now, and they have to kind of play catch up. And today we saw, XLE, we saw XLV, XLI kind of really leading the charge there, whereas the triple Qs were kind of on the weaker side, and most of tech was. By the way, Microsoft here, this looks like late stage stuff to me too. I mean, this is a $2.3 trillion company up over 11% in 3 days. I'm sorry, that's just that looks like to me, just a sign of the times, I guess. And we have other names, TOP, Top Financial, where there's some squeezers going on right now. This does seem like some late stage stuff to me. But 441% here. Let's take a look at GME too, by the way. Wonder if that's not really doing a whole lot. Not AMC either, but anyway, we're seeing kind of like late stage stuff. I think we're kind of in the ninth inning here, but markets are holding up, and they'll probably hold it up at least into Apple earnings, and then again, obviously the Fed statement will dictate everything. But my guess is the more we're up into it, the harder it's going to be for the market to continue rallying moving forward. The big question is, can we can they stop out enough bears and flip enough people bull before then? If they can do that, then I think this market has quite a bit of downside potential. The VIX here, look at this, pound it. So we talked about this, as early as Monday. I said, look, the VIX here is, signaling major complacency, right? And then we got a 1-2 pop. And now it's back to, whoa, yeah, all-time highs. We're going, we're right back to that full bull mode, right? Just extreme complacency here. I think the VIX is getting very attractive down here. I mean, you get down into this, and again, take a look at where we are. The last time we were down here was October and November of 2021, right? So look at where the spiders were here. That was all the way, up here at basically the all-time highs. So extreme complacency going on right now. They threw some liquidity at the market with, SVB and all that. FRC now, that was down. That's going to be, looks like they're going to be taken over. So they're trying to sort that mess out. But right now, I just think this market's very dangerous. And again, like I said yesterday, that price action, antennas are definitely going up here. So either way, be very careful in this environment. But I think that the next top here that we put in, it's not going to be a 3% pullback. It's not going to be a 5% pullback. It should be one that gets you some more significant downside. But again, we'll have to get there, and we'll see how we trade into next week. Anyways, let's get over here. So we mentioned the Qs already. Russell 2000 here, getting another dead cat bounce, still below all four major moving averages there on the daily. Upside's really limited. If you get a really powerful move here, you could maybe get to 180, but I just think a lot of technical damage has been done on this. And there is the gap fill there at 177.44, so we'll watch for that potentially early next week. But again, not a strong chart there. Anyway, look at it, the diamond here, little pullback pattern, then 1-2 pop, new local high. So again, that can still get to 343, 343.50, we'll call it. On the DIA, that's hanging in there. But again, you didn't really build any supports up here on the way up. So just be aware of this. And same thing back here. There's a lot of gaps. There's no consolidation and then thrust. It's just a squeezing. So be careful here. This is the type of environment we're in. But Dow, we'll give it the upside bias there to 345. Semiconductors continuing to dead cat bounce here, still below the 50 MA. I don't really have this getting through 250, maybe 252. Again, that trend line there is going to be pretty good resistance, but it got to bounce off the lows. I told you 240 would likely hold on the first test, and it's holding now. So, but I think one more lower high should do it, and you'll really probably want to go down and test 225, where this green bar is with that 200 MA there. So that's kind of the downside we're looking for on the semis. But again, they did get a bounce today, so we'll respect it, but this is a leading indicator, as I mentioned many times here. And again, IGV, same thing here. Take a look at IGV. What's Tuesday's high? 296.38. So they just got it above that by the close. But yesterday, that was a bit of a red flag, right? The IGV not being able to get above Tuesday's high. And, it barely got up there today. So lagging sector here. Another reason why it's going to be harder for the Qs to outperform the spiders, right? You already have big tech earnings out of the way. And now IGV is showing us that it's underperforming here. So it's going to be harder for the Qs. I think the spiders are really just playing catch up right now. By the way, Exxon reported, which we'll talk about, that hit a new all-time high today. So that helping out XLE, which again helps drive the spiders there. But IGV here, again, we'll see if it, what it does at 300. There's pretty good resistance there on the daily time frame. Transport's continuing to bounce, so nice pop. Did reclaim the 200 MA, so that's a huge positive there in the near term. Big picture, though, I mean, this is a broken chart. Nothing really good here. Forget Tuesday's high. I mean, we're not even close. And we're not close to the local highs. And then again, you look at the spiders, we're above the local highs. The diamond, we're above the local highs. The Qs, we're above the local highs. So transports, big, 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 big red flag right there. Nothing good. And on the weekly, obviously they saved that head and shoulder, but you close below this neckline on a weekly basis, this is going down to 11.5. You can just take a little trend line like that. We'll do a quick measured move. If we do that next week, that's where you go, 11,000. So right into that pivot. So there's major downside potential here. It hasn't triggered yet, so it's not jump the gun, but this is not a pattern of strength, and it's telling us something moving forward, just like the semis are, and just like the Russell is. So anyways, over to bond land. So ZT. By the way, has anybody checked the credit default swaps on U.S. debt lately? Yeah, it's pretty amazing. But in any case, ZT here, getting a slight bid. So yields backing off just a little bit. Again, I think yields are just kind of in a holding pattern. There's not a lot of downside in them on the TNX here, for instance. But, bonds might get a bid. The Fed might say something here. But again, we're not looking for a ton of downside here in yields. But again, holding pattern, nothing really too exciting going on for the time being, but we still expect that higher for longer type mantra to continue to come into play. XHB, Pulte Homes, I heard cured cancer, so yeah, up another 1.3%. That's a new all-time high. What an environment here. Sometimes this takes time here, though. A lot of these rate hikes, they still haven't really kicked in. And again, kind of like how commercial real estate has 1.5 trillion rolling over, it's not affecting things yet, but once that starts to roll over, it will. It's kind of a similar story with the home builders here. So they're still kind of playing off of like the environment of last year. And a lot of that new debt is not kind of in play yet. So that's really the best explanation I can give you here as to why they're still holding up. The other explanation, take a look at ITB, by the way. Just, moonshot here into a lot of, let's go to the weekly, a lot of weekly chart resistance up in this area, but it's held up. But I think, some of it is short squeezing. So that's really kind of that obviously elevates it. Everybody's seeing the same thing I'm seeing, right? And okay, we're in front of a recession. We have rates that are higher for longer. What are you short here? Oh, the home builders, right? And, you get too many people crowded into it, and this is what happens. So there's a combination of that. Ultimately, I think the downside in this is tremendous. But right now, in that environment, I think maybe the FOMC will probably be, it's certainly an opportunity for these to catch some downside and maybe catch a reversal here. Maybe this is the blow-off move, but yeah, home builders continuing to defy gravity. VNQ. Getting a nice bid. Again, I still don't like this pattern at all. You're still below 84, which is that red bar high. Nothing great here. Again, if the market trades up, it can get up to 85.50. And that's really all I see for it at the moment. XLF, that got a nice bid today, up 1.2, right into that 50 MA. This 50 MA is minor, though. We came up there, kind of touched it, basically. Then we pulled back, put in a higher low. So we can get through that. I would still say 33.75, maybe 34 is going to be good daily chart resistance, though, for XLF. So we'll see about that next week. Broker dealers in much weaker shape here. Again, still working on a big weekly bear flag there. That's getting ready. So that's getting ready to break down. You get a catalyst. This is going to hit the 420 before you know it, and then ultimately to 400. But broker dealers, that's starting to look pretty good there on that weekly time frame. That just needs a catalyst to get going. Crude here getting a nice bounce, so a little oversold pop. Again, we talked about this exact trend line yesterday, and lo and behold, they defended it. Look on the weekly, so nice little tail there. Looks like we didn't quite recapture the. It's about 430 now, so. Doesn't look like we're going to recapture that 20-week moving average, but they saved the trend line. To me, crude's still kind of neutral. If you take out this pivot, again, you get up to 82. If you go sideways, it's going to 70. It's really that simple. I just don't love it in either direction at the moment. It needs to do more of, it needs to make more of a pattern here. But those are the levels I've got for it right now. I wouldn't do anything with it at the moment, though. XLE up 1.5, which we talked about. Exxon had a nice day. Chevron gap lower, but recovered nicely. So that was a nice pop there for CVX. And then Conoco flat open and up 1.6%. I don't like this chart though on Conoco. That's definitely on the weaker side as far as these energy plays though. But XLE, it held this key level that's important. It held the gap 8250, 200 moving average, 50 moving average. It's in better shape. But, you know, I think it needs to firm up here if it wants to go test those upper 80 levels that we talked about, you know, the last couple of weeks there. But, you know, nice bids. And another thing, too, Exxon hitting an all-time high today, and XLE still not really able to get a lot going. So it's a bit of a red flag. Also, Exxon, not that this is the end of the world, but you made a new all-time high, but you didn't make a new all-time closing high. So we came pretty sharply off the highs there with good volume. Maybe rebalancing end of month stuff, certainly possible. Maybe some profit taking. Actually, that wouldn't surprise me at all to see profit taking there. But either way, XLE hanging in there. Let's get over to Natty. So there was some news this morning. I guess I believe a pipeline was hit by lightning in Mississippi. That was at around 8 in the morning. And I remember I was watching the futures here and I said, whoa, you know, Natty got a big pump up to 237 or so. And I said, well, let's keep this on the radar. And then 10 minutes later, it was at 250, at 253, in fact. And then it came way off the highs, but we still have a new closing high here, going back to several weeks, really. So I'm interested to see where, you know, again, it's 4:30. We got 30 minutes. And this pivot here is at 238.5. This one is at 241.3. If you could get above that, I mean, we're going to close above this one anyway. So that's bullish to me anyway, because you're going to now close above this breakdown bar. And then here would be your contango gap high. If you close above that, that would be more bullish. Either way, you know, it's off the lows here, and this is something that you got to take into account. Natural disasters, they happen. And this is they are a mover of the price of nat gas. You get a tornado, you get a hurricane, something of that nature. Nat gas generally likes to react to it. But either way, we've been seeing accumulation in this for weeks, and it's been showing that big money's been buying it at these cheap levels. Nice weekly setup there, W bottom in play, monthly pattern. You know, they defended that tail candle, and now we're getting a bid. I think this is set up for a rip in the month of May, but nat gas, nice outside move there, and we'll see how that does next week, but I like the price action. DXY just still cannot get over that 20 moving average. We had a nice pop intraday, and then, you know, take a look at as soon as the market opened, pretty much just right down. Then we came a little bit off the lows there. Still can't get above that 20 MA, so that's been res. I think this is just, the more you hammer on this and put in lower highs, it just needs to go pierce 100 and just get it out of the way. Might happen next week with Apple earnings, with the Fed. I think that's likely to be the case. So that's what I'm looking at there for the DXY. For gold, gold on the quieter side, still hammering, just hammering on that 1994 area. No closes below yet. If you do close below that, excuse me, it can be a sign of weakness there in the near term. If the DXY goes to test 100, you know, maybe because it can go back test the highs 240, 250. But for right now, gold just kind of in a holding pattern. Silver, same thing, that came off the lows as well, hammering on 25. I think this needs to go down to test 2350. Platinum backing off as well. Watch that 20 MA. If this comes in there, I'm not sure I love the pattern because you had this little tail candle there. But we'll see how it reacts next week. But this could get a bit off that 20 moving average. If it got hit on Monday or Tuesday, I would like it better if you didn't have that tail candle there on whatever day that was last week, or was it Tuesday? But either way, that 20 MA is upsloping, catching up to price there. And again, you got a nice reversal there on the weekly. A lot of resistance in that area. But if this holds up, this can go to 1200, maybe a slight pierce of that. So be careful with platinum here. And then copper, this is setting up now. Oops, there we go. Big red bar, 1, 2, 3 inside pattern. If this goes sideways, it's going right to 375. All right, so over to Bitcoin here. And forgive me, I lost my other window again, but We'll just pull it up on the futures. Bitcoin's hanging in there. Nothing really too new to report anyway. So we had that nice pop yesterday, and now this may consolidate. If this consolidates beneath 30,000, this can have one more bid. So we'll watch this over the weekend, and then really it's just to your monthly 20 moving average, which is a little bit different on the regular Bitcoin. This is just the futures, but it's about the same area. So right around 32 to 32.5. That's where I've got really good resistance for Bitcoin on the bigger time frames. I don't think it gets through that. I think that's about all the upside you have. Anyways, guys, spiders, again, we'll give it the upside to around 420. There's that gap there. Remember, big point, spiders have more upside right now than the Qs, and the more we rally up ahead of Apple and FOMC, the harder it is to continue rallying afterward despite dovish news. Anyways, guys, wrapped up here. You guys take care. And I just realized there's my chart, so that just came up. Apologize there. Let me pull up Bitcoin again really quick so you can actually see what I'm looking at. I'll do that again. Sorry about that. If you consolidate here, 30,000 right up to 32. Sorry, I just took a second to come up, so I didn't see it. There's your 21th moving average. That's where we'd be looking for, 32 to 32.5. And then back over here to the spiders again. SPY, more upside than the Qs. The more you rally ahead of the Fed, the harder it is to keep those gains. Anyways, now I'm going to wrap it up. You guys have a great weekend. Take care. I'll talk to you guys all next week.